Thank you, sir. Welcome you all. I, Ashwini Jindal, welcome you all on behalf of the Direct Tax Committee of ICAI. I want to express our heartfelt gratitude to the chairman, vice chairman, and dedicated team members of the committee for their restless efforts in organizing this enlightening series of webinars on Form 10B as well as 10BB. This journey began with a single webinar on 10B and 10BB held on 20th September 23. The overwhelming response from our participants prompted us to delve deeper into these topics, leading to 3 webinars in total. We commenced with a close-by-close discussion on 10B and BB in the context of draft technical guide. The second webinar on 6th October was dedicated to addressing each queries close by close. And today we aim to clear the dilemmas surrounding Form 10B and 10BB, providing a comprehensive guide to resolve any lingering issues in the minds of our valued participants. I extend my heartfelt thanks to the chairman, vice chairman of Direct Tax Committee and their dedicated team for delivering the technical guide on Form 10B as well as 10BB. This achievement has been released under the able leadership of President and Vice President of ICAI. Our previous online meeting was a resounding success with more than 6,800 members joined us for an insightful discussion on Form 10B. Your enthusiasm and encouragement has spurred us to organize this follow-up meeting where we dive deeper into the intricacies of this document. We are fortunate to have 4 expert panelists with us today who will address your questions about each part of 10B as well as BB individually. Today's meeting promised to be a rich and comprehensive exploration of the topic, offering each of you a unique opportunity to enhance your understanding and knowledge of the direct taxes. Thank you for your participation and for joining us in the collective efforts to elevate our professional expertise in the field of direct taxes. Together, we can embark on a journey of continuous learning and improvement. I did like to extend a warm welcome to CA Sanjay Agarwal ji, Chairman of the Direct Tax Committee, CA Piyush S. Chhajjar ji, Vice Chairman, Direct Tax Committee, and our panelists, CA Devan V. Shah ji, CA Vipin Vatavia ji, and CA Rajesh Mehta ji. I will briefly introduce today all of our Chairman, Vice Chairman, as well as our panelists. CA Sanjay Agarwal ji, a highly experienced chartered accountant with over 36 years in the field, has been re-elected to the Central Council multiple times, serving on various ICAI committees. He is a renowned speaker and professionally known for his expertise and foresight in the profession. CA Piyush Chhajjar ji is a chartered accountant and is a son of respected former ICAI president, brings 2 decades of experience as a senior partner of Messrs. Chhajjar and Doshi. He specialized in direct and indirect taxes. CA Devan V. Shah ji, he is a partner at Messrs. Vipin and Shah and Company, brings 25 years of experience to handle charitable and tax matters. His expertise spans audit, income tax, GST, and he holds certificate in business consultancy studies and in ISA ICAI. Devanji is a respected speaker and author in the field. CA Vipin Vatavia ji, a chartered accountant since 1985, excels in direct taxes and charitable trust matters. His leadership extends to role like the president of Chambers of Tax Consultants, and he actively contributes to the committees at BCS and WIRC. Vipinji's knowledge is widely spread through seminars and articles on charitable trusts. CA Rajesh Mehta ji is a seasoned chartered accountant specialized in direct taxes with over 2 decades of experience. He currently serves as Secretary General of AIFTP, renowned for his expertise. He offers valuable insight on topics such as TDS, capital gain, tax audit, obviously on the charitable, etc. Now, I invite our respected Vice Chairman of the committee, CA Piyush S. Chatterjee, for welcome and opening remarks.
Thank you very much, Ashwani-ji. My Chairman, Honorable Sanjay Agarwal-ji, Central Council Member, a Senior Council Member, Chairman of Direct Tax Committee. The panelists for today, CA Rajesh Ji Mehta, CA Deven Shah-ji, CA Vipin Bataviya-ji, Moderator, CA Ashwani Jindal, and all the esteemed participants. A very good evening to all of you and welcome you back to this third lecture, third seminar in this series. The first one was held on 20th of September, second on 6th of October. And as a lot of requests were coming from the members that a lot of questions remain unanswered. And I don't know whether the number of questions will be able to complete even today, but I believe a lot of major portions will be covered. And therefore, I think so a lot of doubts which will be in the minds of our members will be cleared before the end of the day today. I think so this may be our last seminar because now it's a time to start the application. Today is 12th of October. 31st October would be last date. So now members, all the questions, please do listen to it very correctly. That's 2 hours. Then you may have technical guide to support. As we had promised on 9th of October, Central Council, with the hands of the President and the Vice President, technical guide was released. And I think so from my office, they have all sent you the link, which is now available. The soft copy of that technical guide is available on the website of ICI. The link was sent to all the members of the institute by an email. You may look at it. Also, the link of this recorded seminars of 20th September and 6th October also was sent. If you have any questions still in the mind, or if you tend to forget, if you want to refer to that, please do look into it. It's very important. Technical guide is very important. Please do refer. I will just make a small point that just for a reminder's sake, I know you all are aware, but the Institute of Chartered Accountants is a regulatory body. And being a regulatory body, any publication which is issued by the institute is actually a regulatory publication. It has been actually read by the various court also. So if you are taking any decision, if you are taking any view, basis the technical guide, though technical guide is recommended in nature, not mandatory like a guidance. So there is a small difference. But if you are following, if you are reporting what is written in the technical guide, definitely you have a fallback available if somebody is put to a question while discharging your assurance function. So what you have done, you can always refer to it that I followed what my technical guide says, which is issued by Institute of Chartered Accountants of India. If you would just for the recollection, a definition of a turnover in the Income Tax Act for the purpose of 44AB, even the various judgments, various Delhi High Court have said that because turnover is not defined anywhere, you should refer to a material which has been issued by the Institute of Chartered Accountants of India. And therefore, I would request all of you, please do follow technical guide. Technical guide. There may be different of views. You may come to a conclusion that technical guide is asking too much. Or maybe you may have a different view. But if you are complying, if you are following technical guide, you are safeguarding yourself when you are being asked questions how assurance functions was discharged. And that's why my request would be that. Of course, a lot of efforts. I would fail in my duty if online, because already there are 3,500 members today online. And if I would fail in duty if I do not recognize the efforts of all the council members, co-opted members of Direct Tax Committee, special invitee of Direct Tax Committee, panelists who are on the screen, who is on the third time and who had also contributed to this technical guides. And there are various contributors whom we have tried to acknowledge in the book, other than people who have not been acknowledged, but who have sent their recommendations or suggested any changes through an email to dtc@icai.in on the behalf of Direct Tax Committee, on behalf of my chairman, Sanjay Agarwalji. I would really thank you from the heart, bottom of the heart, for contributing to this technical guide, which will immensely help all the members. So without taking much time, very good evening to you once again, and very much thank you to learned panelists, mostly my chairman, Sanjay Agarwalji, Rajesh Mehtaji, Deven Shahji, and Vipin Bataviya ji, and the moderator, Ashwani Jindal ji, for continually supporting us in enlightening our members. Thank you very much. Again, please, Ashwani ji, take the proceedings ahead.
Thank you very much, sir, for the nice words. Now I invite C.A. Sanjay Agarwal ji, Direct Tax Committee Chairman, for the proceedings, as well as to say something and add upon to our members.
Good evening, viewers, the fellow chartered accountants. As the my vice chairman has already said that how much time, how much effort we have tried to put in this publication, because it's a new one, and anything if you write on a clean slate, it takes time. You have to think 10 times before you write anything. And we have used some cautious word so that member may use that for their discharging their duties. I'm also once again acknowledge the instant support by the faculty for the continuous their deliberation, and each webinar is pre-designed, and it takes 2-3 discussion before we come to, and we try to see that all the panelists, they are on same page when they are answering. Though we have divided the queries into different sections according to the clauses which we have distributed for the first time, but the speaking order we are trying to change every time. In the first seminar, Shri Rajesh Mehta ji, C.A. Rajesh Mehta ji was the first speaker, and then followed by 2 my colleague from the Mumbai office and sitting there. Then we started with Vipin Bhai, and finally today Devin Bhai will lead the session in the beginning, and I hope that we will try to answer most of the queries. Wherever something is not there, or we find it that we need to have a clarification, though we have already sent one clarification to President Office, and I'm sure about that today it will go, or otherwise tomorrow it will go to the board. Then board will call us for the discussion on that we have. So with this, friends, today's queries are approximately, we have tried to concise them clause wise, and we have also, instead of taking one clause through 3 times, 4 times, we have tried to see that the clause wise it is there. But we are not dealing them clause wise. We are taking, you can say, deliberation by the faculty wise. So with this background, and I'm sure that members might have seen that the technical guide in the soft form, which is freely available, we have already sent you through mail our both the webinars along with the link for the soft copy of my publication. The hard copies may not be readily available. There are a lot of formalities which we are required to do it right now. And friends, I've requested the office, and since the vice chairman was saying that this webinar is also useful to all those who have not been able to come, either because they have already attended 1 or 2, or today also they are busy somewhere, but still. So I've requested the office to by tomorrow evening or day after morning, we are going to send the link of all the 3 webinars along with the soft copy of the PDF copy of the publication to all the members. This time I request the office to send it to all the members instead of practicing members only. So this is our request, which will be because for every mail, if you want to send to each member, it has to go through a proper procedure and proper approval. So most likely tomorrow or day after tomorrow, we'll give the link for all these things. With this, thank you very much. I'm here to see this, that all the questions which are allotted to the faculties are today completed, and my cash in hand at the end of the seminar is fully tallied with my books of account and physical cash in hand. So with this, thank you very much. Over to Ashwani ji.
Thank you very much, Sanjay bhai. Now I invite CA as the Director Vice Chairman, Sir CA Devan V. Shah ji. First, I am putting query related to C.A. Devan Shahji. Sir, first query by
Good
our
evening,
member
sir.
is related to provisional registration granted in religious trusts for 5 years. Now again, when to file any form for registration?
With reference to provisional registration, 12A 1AC6 is applicable, then provisional registration is only for 3 years and not 5 years. So there is some query in the error in the question itself. So let's assume that it is for 3 years. Then in that case, they can apply for final registration when they have commencement of activity has done and within 6 months of that, or 6 months are left and they have and the certificate is about to be expired. The other option is probably they have taken the registration under 12A1 AC1, in which that means they had old 12A. Then when the 5 years is lapsing, as per subclause 2, they have to take the registration again within 6 months before the end of the registration expiry.
Thank you, sir. Sir, next question is, if any school having receipt below 5 crore, is it necessary to take 12A registration and requirement of 10B and BB?
Any school having receipt below 5 crore can fall under 2023 3AD, and they would not be required to take registration if they are purely educational. Okay, and they do not have any element of profit, because you have to keep in mind, new noble has come in, the Supreme Court, where 1023.3 was specifically tested. So they don't need to file the 10BB and BB. Okay.
Thank you, sir. Sir, next question is...
And sorry. And if they are going for a registration under 12A, then this threshold limit is of no use. There you
Correct.
need to file the return the moment you exceed the maximum amount of the threshold.
Once you enter 12A, once you enter the 12A provision, all the provisions of 11 to 13 of filing, return, audit, and everything will be required.
Sir, next question is also applicable on me also. NGO provisional registration granted cancelled, but tribunal remand back. Question is, can file 23-24 assessment year against provisional certificate during pending issue of approval?
So this is a very tricky question, and it's a good question also. Actually, the matter is that you have taken a provisional registration. Your provisional registration has been cancelled. Maybe you have applied or not applied, and 3 years has lapsed, and you've gone to IT, or you applied and it's cancelled. Matter is in IT-80. When the matter is in IT-80, technically your registration is cancelled. You have no provision of filing the return as of now, and because you don't have the provision to file the return, you might not be able to file the ITR7 because there is no provision to file it when the matter is pending. So the only way out is you wait for the IT.
No, sorry, sir. I would like to add. He said that the tribunal has remand back to the commissioner.
So it is remand back. So matter is still pending.
Okay, sir.
So matter is pending. Then the provisional registration is live. If it is live, then it can file the return.
Okay, sir.
But if it had been cancelled and it was pending, then they would have to go to ITR 5 or 6 as the case may be.
Thank you, sir.
Devin bhai, we have taken care of this issue in the going to send to the board that they should provide some column wherein the litigation is pending. But in this specific case, the litigation is back to the commissioner and not yet being re-examined. So you have rightly said it is now a valid registration. It is not a cancelled registration at least. So they can file it with that provisional one and they can claim the exemption. But the exemption will be subject to the final decision by the commissioner or in the second round of the appeal to the ITAT.
Correct.
Sir, next question is, as per section 115 BBI, any accumulation not specifically allowed in the Income Tax Act will be taxed at the rate of 30%. Accordingly, taxability of trust by default will be at 30% instead of earlier slab rate basis. My question is, in this case, there is any disallowance under section 40A or 40A3, then whether the amount will be taxed at 30%?
Yeah. 115 BBI, first provision, the explanation gives that any amount accumulated other than 11.1 and 11.2 would, if there is any balance, then would be taxable at 30%. So 40A1A and 40A3, whatever is left out, is taxable straight away at 30%. In short, the basic exemption limit which was available till last year for charitable trust of 2.5 lakhs is no longer valid and applicable. And that is because the amendment has come in 115 BBI. There is a lot of controversy around it. Why not? But as of now, as the law stands, you will have to pay tax if you do not accumulate even 10 rupees.
Thank you, sir. Sir, next question is clause 10 of the form 10B. Please explain. It is only for new trust who applied for provisional registration. Other trusts have to select no under option.
Yes, that is correct. It is only for provisional.
Okay, sir. Sir, next question is, if the settler of trust receives rent for school building, which was reasonable, in that case, should it be mentioned in form 10B to fees received for hostel exclusively used by student received students? Well, is want to say, sir, if rent received by the specified person, whether he has to mention
Correct.
or reasonability.
So, what has to be mentioned is all transactions done with 13.3, all the specified persons have to be. So even if it is a reasonable rent given to a settler of the trust, the reporting is required in 43. 43.3 will require any rent or anything paid to the settler. The second question is fees received from hostel exclusively used by students. Now here, what he's trying to say is, from what I suppose a student has paid a fee of 75,000. Would it be a substantial contributor and would it be a 13.3 case? Because there is some money coming from that person, and whether it would be a requirement to do a reporting. In this case, there is a quid pro quo, there is a service being provided and for which there is a consideration. And when there is a quid pro quo for service and consideration, this 13, the substantial contributor provision will not be applicable.
Sir, sorry, sir. In the first case, you said that have to report, but if it is reasonable, then there is no column to report, sir.
No, there is. In which one is this? This is in 10B. There is, na? 43 schedule is SP.
Yes, sir. 42 in the clause 42.
In 42.
If it is reasonable, then there is no need to report, sir. There is no column.
No, there is a schedule, sir. It goes into the schedule.
But in case of schedule, if it is not reasonable, sir, I think so. Please add, sir.
No. Even if it is reasonable or unreasonable, if yes, you have to go to the schedule. Because if I write a no, what the question is in 42, it says details of transactions referred to in 13.2, whether any land, building or other property of the auditee is continues or made available for the use of any specified person for any period during the previous year without sharing adequate rent or other compensation. So it is for the adequate rent and compensation. So yes. And that's why it goes to the schedule.
No, received, then it
Let us read it again. Let us read it again.
Because unreasonable is to be reported.
Yes.
Unless
Unless
unreasonable, schedule will not open. You see?
Yes, sir.
Correct.
Yes, sir.
Okay, correct.
Yes.
Yeah.
Okay. Unreasonable is to be.
Yeah, I wanted to say one thing more in general before you give the final version. Is this none of the schedule in form 10B opens unless until you have a figure or you have an answer of yes or no. Because if you will not have an answer or you have no figure, the schedule will not open. This is absolutely different in respect of other returns where you fill up the schedules and then the figures are brought in the main form or in the main return. So now finally,
it is the reverse.
Finally,
it is the reverse.
Yeah.
Stand corrected to that extent.
Chalo. Thank you, Ashwani ji.
Thank you very much, sir. Thank you, sir. Next question, sir. Basic threshold deduction is not available to those trusts have not spent 85% of the total income. Kya? This is the question, sir.
Repeated question.
This is the same thing. A basic threshold is not available.
Sir, sorry.
Joe
repeated question, sir. Kindly you leave, please.
No problem.
How to report when instead of provisional registration, directly final registration has been received in case of all the trusts?
So there is a clause in 10B in subclause 9 where you have to report the registration certificate details. There is no such requirement in form 10BB to report the 12A registration and the ATG registration. Only in 10B it is there.
Sir,
and that will be 12A1 AC1.
Question
Sir, next question I think doesn't make relevance, but I am reading, sir. Any audit report prescribed for trusts filing return under section 1023C3AD?
No, not liable. 1023 not required to file any audit report.
Thank you, sir. Sir, next question.
They are supposed to file the return only.
Only ITR.
ITR 7.
And claim exemption.
Thank you, sir. Sir, next question is Form 10BB filed by mistake instead of 10B. Where the society has been foreign contribution, can we file Form 10B ignoring the previous filed Form 10BB?
The 10B has been filed by mistake. So you have actually to file 10B. So you can still file the Form 10B. In that you have to give in observations and qualification that erroneously this form was filed. However, the correct requirement is to file 10B. And when you file the ITR, you give reference to the Form 10B in the ITR and not the 10BB.
Next question is already answered, sir. Next question. Will salary paid to secretary of school who is doing administrative work will be allowed as application?
I think that is not an issue only. I'm assuming what he implies is secretary who is a trustee. So yes, if it is reasonable and unreasonable. So if it is a reasonable amount of salary, then it is allowed. And if it is unreasonable, then we'll have to go into the clause. And as you all rightly said, if only it's a yes, it will get open.
Okay, sir.
But here only to take care that you have to check the reasonability by keeping necessary papers and also probably the job appointment letter and etc. etc.
17AA.
Sir, next question is how many times Form 10BB can be revised and filed at IT portal?
So there is an FAQ for 10BB, and in that FAQ they have said that you can revise the Form 10B. There is no provision in the law where it says whether you can revise or not. So what you can do is you can revise the Form 10B, but how many times is something that I would not recommend any professional fellow brother to do, because you need to give a reasoning why you are revising your Form 10BB every time you revise it. So if you are going to keep continuing to revise it, it might not, and it can be said that that revised is not valid.
Sir, next question has already been answered. Next. Respected sir, as per amendment proposed to section 11(3), if the accumulated income is not utilized for the purpose for it is accumulated or set apart, it shall be deemed to be the income of the previous year, being the last previous year of the period for which it is accumulated. Hence, now, if the accumulated income is not applied within 5 years, the same shall be taxed in the 5th year. Before the amendment, it was taxed in the 6th year under section 11(3) of the Act, applicable with effect from 23(4). For example, for the assessment year 17-18, the 5th year of the accumulated expires on 31st March 22, and additional benefit of 6th year for utilization expires on 23. Queries are here. Please clarify, will the 6th year be given for utilization by 31st March 23 pertaining to income accumulated for 17-18 as amendment is applicable with effect from 23(4)?
Okay, so this is a very good question actually. What he is trying to say is that ultimately the benefit of 11(3)(c), which was there which can be up to the 6th year, was withdrawn in the previous year, and it was withdrawn in the Finance Bill 2022. The bill was 30th March 22. Now effectively and it was applicable from AY 23-24. So on 31st March 22, for AY 17-18, 5 years had been completed, but 11(3)(c) old provision was still applicable. As per 11(3)(c) old provision, they could use it and spend it in the 6th year. And because of that March 22 balance could be carried forward to the 6th year. And now in the current year, whatever is carried forward can be spent. If it is not spent, it would be taxable. In the current year, that is March 23, there are 2 years for which accumulation has to be spent, which is for AY 17-18 and AY 18-19. And to further supplement it, though that doesn't mean that it's a legal validity, but when you fill up the ITR, in ITR 7, there is an option where AY 17-18 and AY 18-19, both are being picked up, and you can claim the application of both those years. And hence, though the queryist it's a very good query actually, but it will be available. So you may please continue and take it.
Sir, next question is also, I think, repeated one. Instead of filing 10B, erroneously 10BB file, the society was granted registration under 12A. Can this be rectified by AO?
So I think
leave it.
Yeah, this is going into previous year. I think this is a 22-23 question, not
Okay,
AY 23. Yeah.
Sir, 10B is applicable for registration under 12A. If not registered under 12A, company section 8 company, what return we should file instead?
So if you are a Section 8 company, you are not registered under 12A, then the provisions of ITR 7, you will not be able to file ITR 7. You'll have to go to ITR 6 and you will be liable to file the ITR 6. However, 139(4)A, it says that any of the charitable or religious can file the ITR, but when you practically go to file the ITR, without the 12A number, ITR 7 is not being able to go through. And hence there is no option. So if you are a Section 8 company, you become a company which is a normal company and ITR 6 comes in. And if you are a trust which has not taken 12A, you have to file it as an AOP trust under ITR 5.
Sir, next question is, if trust income is below rupees 2.5 lakh, then whether 10BB is applicable and whether ITR is required to file. What is implication of 115 BBI if income below 2.5 lakh? Is it exempt or tax need to be paid?
Okay, so if income is below 2.5 lakh, then 10BB will not be applicable. So you don't require to file your audit report. However, you are required to file your ITR because you are in 11, 12, 13. 12A, 1B is applicable, BA is applicable. And if you do not file the ITR, you would lose your exemption for the year. So ITR filing is mandatory. And what is the implication of BBI if income below? Now, here again, as I repeated earlier, in 115 BBI, any income, whatever is balance left, if not accumulated under 11(1) or 2, would be taxed straight away at 30%.
Sir, next question is related to rate. What is the tax rate for Section 8 companies? Is it 30% for AOP or 25% cess, etc.?
So they have not mentioned. So I'm assuming it's a Section 8 without a 12A. Okay, if it's a Section 8 without a 12A, then it'll go to ITR 6 and it'll be at 25%.
Thank you, sir. Sir, in case of an educational institution registered under 12A was not obtained, gross receipt were less than 5 crore. While filing the return erroneously found 10B, this has also been delivered, sir.
No, it was
covered.
Will amount kept in saving or current account of the bank account comes under 11.5?
11.5 uses the word deposits in scheduled banks. Now, deposits in scheduled banks includes the saving bank balance also. However, for practical purposes, it is always advisable that you please park it in fixed deposits so that you don't go into that gray area of litigation, because sometimes the assessing officers could look at it more strictly, and though you might have to go to the higher authorities to get relief.
Sir, next question has already been answered in the previous seminar regarding whether to report all specified personnel.
So here, I think only thing that you want to add is that specified person. The CBDT has come out with a circular on 9th October, where for substantial contributors, they have said only for those people who have given donation during the financial year, that is March 23, how to be reported. And even the relatives and the substantial interest, if available, they need to report.
Next question, sir. One of my client trust runs a school having receipt of below 5 crore assessment year 22-23. We have been filed Form 10B and ITR 7 is filed under Section 139(4)A, reflecting application of income during the previous year 23-4. The receipt of trust is also below 5 crore. Which audit report, sir? It is already answered. How it is possible to identify the relative who contribute donation in excess of 50,000? This has also been delivered, sir.
No, they are asking is identity. So I don't think we are going into investigation. You have to take a certificate from the trustee that these are the relatives or the donors. And I also recommend that at the beginning of the year or during the year, probably a board resolution passed by all the trustees listing out all the relatives would be a good healthy practice, just like how you have to file in the companies or DIR 8.
So next question is also already related to specified person, has been answered many times. Then next, sir. Our assessee have educational college received below 1 crore and it has got provisional registration 12A approved and final permanent approval is pending. Can I file ITR under section 1023C 3AD?
Once you enter 1020, once you enter 11, 12, 13, you cannot get out into 1023 again, because once you go out, you can't come back into this. There's a once in a lifetime. So for this case, it is, you will have to file your form 10BB and file the ITR. However, there is that issue of benefit to the assessee for which representations are being made. But when it comes out, till then you have to audit and file the ITR.
Thank you, sir. Sir, for assessment year O was filed ITR 7, wherein it was not registered under 12A. All expenditure has been disallowed by AO and 30% tax has been imposed. Can I file ITR 5 now? Otherwise, what remedy are available for assessee?
You cannot file your ITR now because you've already been assessed and this has been disallowed. So the only remedy is you have to go to ITAT, or you don't even have the option of filing a 139.8A because your assessment has already been done.
Sir, next question is a donation received.
Devin, they can go to CIT appeal instead of ITAT.
Sorry, CIT appeal only I meant. Okay, sorry. Yeah.
It is CIT appeal.
It was CIT only, sorry.
Sir, next question is
you have to go to 12A, you have to go to ITAT.
Correct.
But
12A, you have to go to
when
ITAT.
your assessment is there, then you have to go to
CIT appeal. Yeah. Appeal.
Sir, next question is a donation received in the form of equity shares with the mandate to apply dividend for objective of the charitable trust. Can CT continue to hold shares without any tax consequences?
No, there is 11.5 does not to hold equity shares. If you have received any equity shares as a donation, then within 1 year from the end of the year in which you have received the shares, you are supposed to sell those shares and credit the income and create the fund. If you do not do that, it's a violation under 13(1)(d). There's a proviso 2D, and the shares to be received and redeemed and sold. And if it is not, then the entire the income to that extent would be taxed under 115 BBI.
Thank you, sir. Sir, next question already answered many times. He is again saying related to clause 42. If many salaries, allowances, etc. is paid, whether to choose yes or no. Sir, next question. Whether interest income on corpus fund is taxable as income from other source or to be treated as addition to corpus fund?
No, interest is going to be income from interest only. And I think what they're trying to say is in the ITR, whether under IOS. No, in ITR, you don't have to put it under IOS, you have to put it under Schedule AI. Because in ITR 7, a trust with 12A doesn't have to go to income from other sources, but they have to go to Schedule AI and Schedule VC. So this should become a part of the income, which is, and for which application can be done. If not done, then it could be taxable.
Thank you, sir. In case application from donation during the financial year 22-23 falls short than 85% of the contribution received, then will Form 9A and Form 10 both be required to be filed, or only Form 10 will be required to file?
You can file both or you can file one, depending on how you want to accumulate. So if you are accumulating for 1 year, then you have to file Form 9A. And if you are accumulating for 5 years, you have to file Form 10.
Thank you, sir. Sir, next question is, while considering substantial contribution received in trust above 50,000, should we consider rent received for premises?
No, I don't think so. That is required. It's a quid pro quo transaction. If that be the case, then for all trust, any trust and every trust, all transactions will become a case. So substantial contribution is more in the nature of donation and voluntary contribution that has to be considered.
The next question is, in case of society not registered under 12AA, all receipts will be taxable or excess of income over expenditure only?
As per commercial parlance, excess of income over expenditure only. If it's an AOP trust not registered under 12A, then whatever is earned, expenditure incurred to earn the income will be allowed as an deduction, and it will be taxed on the balance.
Sir, next question is, sir, Form 10 for rupees 5.35 crore filed in 2021 with accumulation till 25-26 with the deposit under 11.5 with bank. Can trust break the deposit in current year 23-4 and redeposit with the cooperative society bank for the purpose earning more interest? Whether trust can do so? What is the consequences for breaking FDR?
The trust can break the FD and put it in a separate bank. There is no provision not to do it. But at the end of every year, the amount of accumulation under 11.2 and the amount of fixed deposit should always be matching with each other. So it is always advisable to, even if wait and hold on for a long time, immediately repark it so that the FD is there.
Next question is already answered, sir. Sir, next question. In case of an educational society claiming exemption under section 1023(3)(AD, donation to society and interest on deposit is also in the ambit of, yes, then do we need to report these amounts separately in ITR or not?
No, you don't need to. You fill up Schedule I, subclause 3 in the ITR. So the entire amount is a single figure there.
Within 5 crore.
Yes, sir. Thank you, sir. Sir, next question is, 12AB registration received only for religious purpose, but trust also engaged in hospital, educational, and also received income from rental activities from auditorium also. Whether trust liable for 44AB audit or 10B is sufficient?
Now, first here, I think the question itself is a problem because they are saying only a religious trust. Now, other than that, we are assuming that the other objects are not part of the object. If a trust carries out any other activity which is not a part of the objects of the trust, then it would be a contravention of 12AB4 and it would lead to cancellation of the registration of the trust and 115 TD. But let's assume that they have carried out the activities along with religious ancillary activities of hospital and education is part of the objects. Then in that case, then the trust would have to file the Form 10B and for the rental activities from auditorium. Now here, if the auditorium is continuously lent to a specific person, there is no trade, commerce or business that is involved in this transaction. So in that case, the audit would not be required and one-off transaction. If it's a regular business of giving on rent, but renting activity would always be dependent on whether there is a commerciality involved in it and the surplus, and order will have to be analyzed. And depending on order, we will determine the applicability of the audit.
Thank you very much, sir. All the new question has been covered. Some of the old questions are pending. Now I am starting with another panelist. I will request you to kindly, sir, mark which the relevant question, Devan sir, and then we will take it at the end, sir.
Okay, sir.
Thank you, sir. Now I request, sir, our another panelist, CA Bipin Batavia ji. I am reading the question related to Bipin sir. Sir, first question is, in Form 10B, point number 28, income derived from property held under trust, word used derived. So here, income should be considered or CA basis,
cash
basis or accrual basis?
Cash basis.
Okay, sir.
See, income is to be recognized on the basis of method of accounting followed. Derived means it is not that actually received. If you are following mercantile system of accounting, you have to take the accruals in the account, and accordingly, on the commercial to complete the account, even institute accounting standards also say like that. So therefore, it is to be considered on the basis of accounting system followed by the trust. Either cash, then cash, or mercantile, not mix.
Thank you, sir. Sir, next question is: a school is run by society which is registered under 12A. Gross receipt is more than 5 crore. No donation has been received. Please guide under which column the receipt like fees will have to be reported.
Yeah. In Form 10B at clause 28, they have asked, other than voluntary contribution, other income is to be mentioned there. So whatever other income is there, you have to put the total there and bring it to the grand total income or income to be applied final figure. That comes to, I think, at clause 28.
Thank you, sir. Sir, next question is: if life membership received by assessee from members which is shown in balance sheet as addition to corpus, should this amount of life membership received during the year needs to be offered for tax?
I think that will depend on because section 11(1)D is amended from 1422, wherein it says that 11(1)D will be allowed only if the corpus donation received or corpus donations are credited to fund account are to be invested in 11(5) mode. So in this case also, if life membership is added to the corpus fund, it is to be invested in 11(5) mode so that you can claim 11(1)D. Otherwise, it is to be added to the income.
Thank you, sir. Sir, next question is: there are many trusts and societies which are in existence for more than 100 years. Details of cost of properties owned since inception may not be available. How do they maintain and furnish the same? Under Rule 17AA171I and 202 in respect of movable. Also, Schedule 40A3A are in contradiction from the requirements in serial number 31, 10, and 9, and against the provision of Act which restrict the application and do not provide for disallowance and taxing the same.
First of all, 17AA, this is the first time they have asked that properties are to be recorded in original cost. It's really a difficult point. Very old trust, 100 years is a great time even. Otherwise also, if 30, 40 years old trusts are there, how they can find out the original cost and record it that. I think in that respect, the Board of Trustees can pass a resolution and record that it is not possible for them to arrive at these figures and to maintain in the books of accounts. Henceforth, whatever cost is there, it is to be maintained accordingly. And the same can be qualified in the audit report if it is required, and that view is to be expressed.
Thank you, sir. Sir, next question is: assessee is receiving transportation charges from students. Whether separate books of accounts are to be required for this activity? If not maintained till now, what is the remedy?
Transportation, I believe, will be fees. So bus fees for a school which is running part of the educational activities. So that is falling under educational activities. So we are not going for a business. So it will not fall under business. 4A will not be attracted. Therefore, separate books of accounts are not required to be maintained.
Thank you, sir. Sir, next question is: corpus donations are not separately identifiable. Whether a board resolution is sufficient in which it is stated that these FDRs are toward corpus donation.
Board resolution will not work. Because the corpus donations is to be taken as a corpus if there is a direction for a corpus donation. So corpus donation letter of because it can be oral as well. There are case laws, but all practical purposes you need written direction for the corpus donations. So if there is a written direction for a corpus donations, it can be find out which are the corpus donation, which are not. But so far as the investment is there and board is passing the resolution, I think that will not be sufficient and that will not be correct process, because even if otherwise, if you want to take as a 11-1D, investments is required in 11-5. So already investment is there. That doesn't mean that if you can take that to that extent corpus. I think this situation is to be seen very clearly that if there is a direction, then only it will be a corpus. Otherwise, it will be a normal, general voluntary contribution.
Thank you, sir. Sir, next question is, please provide clarification on corpus annexure in 10B and ITR 7, whether funds to be separated before 1st April 21 and afterwards. Further, earlier there was option in ITR to show investment from corpus and other. Now no option in ITR other than corpus.
Yes, you are right. I think the questionnaire knows the provision very well. Only thing is that now, as per the new amendment and this requirement of 10BBB, you have to give, there is an amendment, because earlier 1420, before 1421 will not be allowed and considered for replenishment. That amendment has come. So that is why they want that separation and details are to be provided accordingly in the schedules. It is mandatory and it is to be filed. Yes, please.
Thank you, sir. Sir, next question is, sir, whether the trust can keep the amount received as corpus in FDR or saving account. There was no specific institution from donor except that the amount is being on account of corpus. In such a case, is there any problem if the said amount is lying as such in FDR or bank account?
Devan has already covered in his question. Even the bank balance or bank account is also deposited under the scheduled bank are considered 11-5. So lying in the bank also satisfying 11-5 modes. FD is certainly yes. Even there are so many other modes are prescribed, mutual funds and other government bonds and so many 11-5. Even rules have also added many investments. Only thing is, I will add, since the question has come to me, see, keeping in bank balance, how you can control that balance? If your balance is reducing that money, then you are in trouble.
True.
So your 11.3 will apply and then you will face the problem of taxing out that. So that, and one more thing, 11.1D is very clearly says you have to maintain it specifically. So maintaining with specifically, it means that you have to keep that identifiable FDs or investment of corpus year-wise in the balance sheet, you can keep that. So therefore, it is advisable to keep in FDs rather than bank balance. If it is there and FD is not taken, it can be reflected accordingly in the balance sheet.
The spirit is to have it in FDs.
Yes.
Next question is, sir. The trust has constructed a community hall out of the corpus. Is there any contravention of any law where the corpus was received for this purpose only?
Yeah, no. There is no any contravention because immovable property is also 11.5. So construction of a community hall is an immovable property. If the corpus is spent into immovable property, it's a you have fulfilled the requirement and 11.5 modes are there. Immovable property is covered.
Thank you, sir. Sir, next question is for a trust not having 80G, having only 12A. Where to fill up the corpus fund received in 10B? Can I fill up in clause 22? The trust need not file 10BD.
Will you repeat, please?
Yeah. Sir, for a trust not having 80G, having only 12A, where to fill up the corpus fund received in form 10B? Can I fill up in clause 22? The trust need not file 10BD.
Yeah, correct. Because you have no ATG, so 10BD is not applicable. 10BD is applicable if you are covered under ATG 5.
Correct.
So in that case, mostly religious trusts are not having ATG, and if they receive the corpus, they have to report at 22. Correct.
Correct.
Sir, next question is full para. Find and closed list of doubts in form.
What is the question number?
Which
Question
question is
number,
it, sir?
sir, 27. Yes.
Because there is a mixing.
It's a lengthy question.
It's okay.
Very lengthy question.
Sir,
You-
question number 27.
I think Ashwani ji,
Sir.
Devin bhai, you can read for Vipin bhai.
I don't have.
No, but thing is this:
Okay.
most of the questions which you have asked is not allotted to me.
But it's okay. Just go on. It's okay. Just go
There
on
is
with
a
the
mixing.
question.
You just read the question, we'll answer.
We'll answer it. Don't worry.
Okay, sir. Sir, find and closed list of doubts in form 10BB HEAD. Head, maybe. Application of income out of different sources. 1. Point number 26. Anonymous donation chargeable to tax at the rate of 30% under section 115 BBC. Not applicable.
Yes.
Correct.
Not
Here
applicable
it
to-
one by one we will go on answering.
Okay, sir.
See,
Okay, sir.
another 10BB says very clearly only taxable at 30% figure is to be given. And in 10B, they are asking all the details of anonymous donations. In 10B, they have given a relaxation. You have not detail. You have to decide which one is taxable and how much that amount is there. You have to fill that figure and automatically it will catch. The system will catch 30%. Next, continue please.
Sir, uska question, a relevant question. His question is not applicable to religious trust, right? His question is this, sir.
Yes,
Not applicable.
not applicable. You have to leave it back.
Okay, sir. Sir, next question maybe point number 27C. Income of earlier previous year up to 15% accumulated or set apart. What should I do here? This is anyway allowed to be accumulated automatically, right?
No. I think he's mixing it up. What is happening is application of income to the extent of the income earned will come under 23, and 27 will have only anything beyond the income earned, say out of 11. So if there is a deficit, then the balance will come in this 15%. So if there's a deficit, if it is out of 11.1 or 11.2, and if not, then it will come from the earlier years accumulation. So this C is earlier years accumulation and not the 15% benefit that you are getting in the every year. Yeah.
Sir, next question maybe related to him. This is part of this question. Commencement of activities and details of place where books of accounts and other documents have been maintained. Point number 10I. Where the auditee has been granted provisional registration or provisional approval, whether activities have commenced during the previous year. Yes, no.
See,
Ashwani ji,
I think this is only for a fresh registration trust. It's an old trust, so this clause is not applicable.
Not
it was covered in
applicable.
mine also.
so it is to be right no, so all other columns are not to be filled.
Correct.
But if it is a provisional registration, then you have to put a date of commencement. Now, date of another question, we will just say our understanding, because the trust is formed for the purpose of its own object, and that income is to be applied for those objects. So the date on which this first application of income is done, it should be considered as a commencement of activities. Others are not commenced the activities. So from there, whatever within 6 months normal provision regular registration application is to be done.
Thank you, sir. Sanjay ji.
actually, this query is related to Sangeeta ji, Sangeeta Dhanraj, and I think she has made a lot of questions in one query. I'll request that the mail can be sent at dtc@ici.in, making the part questions A, B, C, D. So we'll be able to, and you give your number so that we'll be able to answer your queries 1:1. So actually you can skip it.
Yes, sir. Yes. Thank you, sir.
Yeah,
Sir,
thank you,
next question is, sir. Sir, the question is, I have filed ITR 7, but not filed Form 10B. So what I have to do? I have received demand notice from IT department.
Which notice it is received?
Demand.
Demand notice. It means 143 1 is passed.
Yes, sir.
But now still the due date is there.
Correct.
SSC is entitled to file audit report in 10B and request for rectification and write his note in the grievance and writing to assessing officer as well. You cannot now revise.
Sir, I think this query is not related to FY 22-23. It is related to earlier year. So they have to go for a condonation and then they may get the relief. There is a circular. Vipin bhai, Rajesh bhai, you can give that circular. Which circular is there for condonation of delay of 10B? They can go and file and get the relief.
There are 3-4 circulars, and those circulars, 365 days from 18-19 up to CIT exemption city, and more than 365 up to 3 years, it will be Principal Chief Commissioner, and thereafter CBDT. So those circulars are there. Condonation can be applied if it is filed late. But if it is for after 18-19, 365 days up to CIT exemption, then up to 3 years, it will be with Principal Chief Commissioner, and then thereafter they can try CBDT.
Many.
Sir, sorry, sir.
See, we presume it is a question. This question is for assessment year 23-24. That is also possible. Must have, but I'm really surprised whether that 143(1) was received.
Mr. Umesh, this is your query. If you are there as a participant today also attending the query, this webinar, if your answer is not up to the mark, you may write it so that we can reply you. This presumption we have made that this is not for 22-23 because 22-23 Form 7 date is not yet finished. So we need to see this.
Yes. And earlier, this circular was 19th July 2022 regarding this condonation of delay.
Yes. One more thing. Ashwini ji.
Yes,
please,
sir.
those questions who are concerned with 10B, BB,
yes, sir.
should first we complete those questions.
Yes,
the earlier years questions, then rightly Agrawal Sahab has said, they can write to us, we can reply.
Okay, sir. Sir, what to do when trust has only loan as source of income and no contribution or donation? Does loan constitute income?
Loan itself is not an income. So loan is not to be considered as an income. If the loan is utilized for the purpose of application, then that application will not be allowed as per amended provisions. Only repayment of loans will be allowed as and when it is repaid. If it is application is claimed, because there is no any other income. So they must have spent that money for application of income, whether capital expenditure or revenue expenditure. So now out of the loan and borrowings, application is not allowed. Therefore, it is not income and at the same time, no application.
Yes, sir, next question. Sir, next question is
Sanjay ji wants to say something.
Sir,
Sanjay bhai,
in this question, we are presuming that the loan is for received during their financial year 22-23. And if the loan is used for earlier year, so in that case, the application is made. So that is also not allowed. But if it is from 22-23, then at least you have a chance that within 5 years, if you replenish that by making that loan, using that loan, then you will get in that year that application. So presently, no application because no income and loan is not an income. If I am correct, please say. Vipin bhai.
Replenishment is permitted only for corpus donations. If it is used and you have not invested, then whenever in the 5 years you replenishment, you get the corpus. But so far as the loan is concerned,
repayment.
Loan is concerned, only repayment will be allowed as a application of income. Whenever you repay, 5 years. Next, please.
Sir, next question is related to 269 ST. I will read the question. It is a lengthy question, but the ultimate query is related to in the PDF format. There is no mode prescribed from which mode it has been received. The question is related to that regarding reporting. Sir, clause 47 of the form 10B as notified by ITD reads as follows: whether the auditee has received an amount exceeding the limit specified in section 269 ST from a person in a day, or in respect of a single transaction, or in respect of a transaction related to one event or occasion from a person during the previous year. If yes, fill schedule 269 ST. Accordingly to plain reading of the clause, all transaction of receipts exceeding limit specified in section 269 ST rupees 2 lakh are required to be reported in this clause. The PDF format form as notified reflects mode of receipt, check, bank, electronic transfer, etc. However, in utility provided by the ITD, the details which can be verified are only name, address and PAN of the pay and amount. The details of
Sir, I got it.
are not available.
Sir, it's okay. I think he is not aware that there is an amendment made by the circular number in June 23. There was a circular where in the schedule ST for 269 ST, they amended it and they removed all these other account pay checks and all those things, and only the name, PAN and address and amount are to be given. And in that case, that's the case. And if it's only related to a single transaction, I think that's the thing. So you can refer to the circular of June 23
and that
I think 24.
Cash. That too in cash.
6 or 24.
Other than electronic mode or account pay check.
Yeah.
Sir, next question is, sir, can a trust income become taxable in case of overspending of expenditures as compared to income? As the format of ITR 7 and current form 10B are made as they first fix the spent amount as equal to gross receipt during the year, and then it reduce from the upper figure the expenses which are unpaid. Provision of expenses, though trust is in loss.
So I think again, it's a deficit case, just as we discussed earlier. There is an option in 37 in 10B and in 27, I think, in 10BB, where you have to. So if you have a deficit, you use it out of loan, borrowing, corpus, 11.1 or 11.2. So that is the clause that he is referring to. So only to the extent of income, it is reported in 31. Everything else is reported in 37.
So 37 says from where it is. Those details are to be given, whether corpus, whether 11.2 or 50%, whatever, those details are to be given.
Sir, next question is, sir, if we show capital expenditure under fixed asset, then we can provide depreciation in books of accounts. And what is the treatment in computation for the depreciation?
Yeah. So section 11.6 very clearly says which depreciation is allowable and which depreciation is not allowable. It is very clear that if the capital expenditure anytime in past, if it is claimed as application of income, because the capital expenditure is also allowed as application of income, in that case, the depreciation on that asset will not be allowed as a depreciation. Otherwise, if in past, if you have not claimed, or current year or in past, if you have not claimed that asset as an application of income, then depreciation is allowable. And accordingly, the accounts are to be filed as per your system. Whether mercantile, complete, commercial, normal accounts are to be prepared. In case of such disallowance, or this one is add back. It is not disallowance. In fact, it is add back. So if there is add back is to be done, it is to be done in computation of income.
Thank you, sir.
Right.
Next question is treatment of fees received in advance for academic year 23-4 in final year 22-23. Whether the same will be treated as income or can be taken as advance received for the purpose of calculation of income as per Income Tax Act.
See, advance of income will also recognize on the basis of system of accounting followed. If you are following mercantile system of accounting every year advance, then next year advance, and that it is to be recognized. If as per your system it becomes your income of current year, it's a current year's income, and then whatever income is applied, it's an expenditure, and the balance is your income. So far as the computation is concerned, claiming 11, 12, and other accumulations is a different calculation of taxable income. In computation, it is to be worked out.
Thank you, sir. Sir, next question is, can access of application over income funded out of corpus treated as application in subsequent year, and how to show access application in books of accounts?
Corpus itself, you cannot, if you spend for application of income, it will not be allowed as application of income. 11(1)(d) is now amended and it is very clear. If you invest, see, it is something you do not get even 11(1)(d) and you do not get application of income as well in the current year. So there is a double two-way loss. Loss means you're losing that exemption to that extent. So if it is not invested in 11(5), then it will not be allowed as application of income as well.
Sir, next question is, sir, sponsorship received from a vendor to college event, whether it is donation or it is income of that college event.
Repeat the question, please.
Sir, sponsorship received from a vendor to college event, whether it is donation or income of that college event.
This sponsorship matter is really very, it is not at all clear, because we have seen so many pharmaceutical companies, they sponsor CME programs and they do the TDS as well, 194C or 194J or all that. In fact, if for a college function is received, it's an income. Now, if they want to make in account separate surplus, they want to know from that event, then that sponsorship should be credited to that event, and whatever expenses are spent on that event is to be debited, and the net figure can be taken to income expenditure account. So that can be the accounting treatment, and because it is specifically given. So that is why if it is credited there and the net amount is taken, whether expenses or surplus, to the income expenditure account, and then working is to be done for computation.
Sir, next question is, sir, if corpus is used for... Yes, sir.
Ashwani ji, yes, actually, sir. Let me tell you this problem. They wanted to take the information. If suppose the sponsor have deducted your tax under the specified sections, that is why they are asking that information in question number 19. The detail of receipt of oddity on which tax has been deducted as source under 194C, J, H or Q. So that is why they are asking this information, whether this particular thing is as a trade commerce or otherwise. So if you are saying it that this activity is trade or commerce, then in that case you are supposed to fulfill the conditions, and then you see that you have to pay tax or not, and it is a business receipt. But if you say that it is otherwise, and for your discharging your charitable activity, so this information they will capture here, and that can be used in your ITR 7 also, so that it doesn't get an effect on your application of income. This I wanted to just add
in continuation of your addition, sir. See, the companies or the persons who are paying that money as a sponsorship, deducting the tax. So the deduction of tax in their books of account, we presume that they are claiming as expenses. Correct. But and here we are taking as a donation or charitable purpose. So there
but you can't classify that as donation. We cannot classify as a donation, because they will deduct the tax, and when you will show as a donation, it has to be shown as a project, and that project you are doing, and very rightly said, that the netting, if you are saying, but for the purpose of charitable, you need to show the gross receipt, then application, what you have done for the object of the trust.
Okay, sir.
Sir, next question, sir. Sir, next question is, if corpus is used for repayment of loan, then it will be considered as application. The loan was earlier used for construction of building, for which corpus is created.
So earlier the corpus was created and was spent for building. So that meant 11.5 investment, so that is no problem. But if the corpus is used for repayment of loan, so repayment of loan you are getting as application of income. Because as per now amended provision, repayment of loan will be allowed within that for 5 years period as an application of income. So if you are claiming that application of income and out of the corpus, then that application should not be allowed, and according to me, it will not be allowed as an application of income. Because that money that is used for the purpose of application of income. The words in the section says, if it is for application of income, then it will not be allowed. If Rajesh bhai, you have another view?
Yes, repayment of loan out of corpus is not an allowable expenditure. Under clause 37, they have also already asked for this information. So you are right.
Yes. Next, please.
Just a minute. Actually, the query seems to be something different, and it is not being captured properly. If I understand clearly what the queries wanted to say, Dipti, if you are there, you can write in chat box also. We'll capture your point. Office, please see to this that Dipti Dhakad chat we get. Now, I took let us say, a loan of lakh rupees or 10 lakh rupees. I utilized that loan for the purpose of building construction. Now, the thing is this, how you say that you created a corpus. The building which you have, if you have constructed prior to 1/4/21, the balance sheet, if I see in the T form, left hand side you have loan and right hand side you have a building. So when you filed the return last year, either if you have an income for which you have taken a utilization by treating that capital expenditure in the building as an application, and you offset something from the income. But if you do not have an income, then you would not have been able to set off that application. So how the corpus is created? Corpus would have been created only if you suppose you are having 2 lakh rupees of another income, and out of that 1 lakh rupees you have claimed as an application which you have utilized from the loan, and then the money which is created, you take it to corpus. And if you credit to corpus, then in 22-23, if you are utilizing that corpus and you want to say that you are repaying the loan, because these both are the credit entries, not debit entry. You have a corpus, you have a loan. Now, if you want to repay the loan and want to create a corpus and take the application. I don't think that you will get. And if you wanted to repay the loan, but you are saying that you are repaying the loan from the corpus, you can't pay from the corpus itself. Both are credit entries. So I think the queries, you need to make your query with the financial figure so that here we can understand clearly. If in the chat box something comes, please let me know.
Even I said it's the same thing. You will not get.
Yeah. So thank you very much. Please continue.
Sir, next question is, sir, will trust have to file form 10BD when there is only initial corpus and no other donation is received during the year?
Yeah. Now, initial corpus means what? I presume that initial corpus is a settlement amount, where it is settled by the settler, and that initial corpus has come. So, initial corpus is received by the trustees on the execution of trust deed. And I believe there will not be ATG on that date, or ATG must have taken thereafter. Therefore, that 10BD is not applicable because there is no ATG, and that corpus is to be taken as a corpus normal in the balance sheet, as under the corpus head settlement amount. So there is no applicability of 10BD because ATG would have been obtained thereafter.
Thank you, sir. Sir, next question is whether surplus in income and expenditure account within the limit of 15% can be considered as corpus fund by passing resolution?
You can create that. I think many trusts are following this system. But now after the amendment, I see little difficulty in passing such an entry and taking it to the corpus. It is advisable to take it any contingency fund or any other fund you can create, specific fund. That will not create any much problem, because once you are taking as a corpus and you are not going to claim application because you are transferring out of your income expenditure account, because less than 50, you have already spent more than 85. So that amount, in fact, the income expenditure account will be normal. That 15% you claim in your computation or ITR. 15% you do not claim in your income expenditure account. So if there is a surplus, the surplus goes to income expenditure account in the balance sheet. But in the income expenditure account, by resolution or by content, there are so many trusts I have seen, they have a clause in the trust deed. So that you can transfer. So many Jain trusts, they transfer that fund to specific certain funds they transfer. So that is internal transfer. So far as the income tax, ITR 7 or computation of taxable income is not to be considered because it is putting from one pocket to another pocket.
Thank you, sir. Sanjay ji, sir, Chairman, sir, can we stop sir's question here and we will continue with the Mehta ji, and at the end we will recontinue, sir.
Yes, welcome.
Thank you, sir. Sir, now I request our panelist, CA Rajesh Mehta ji. I am now reading the question related to him. Sir, just a minute, sir. Sir, the first question is, sir, in clause number 19, details of receipts on which TDS is to be deducted is taken from as per books or as per 26AS?
As per books. Because books are final and 26AS may be wrong.
Thank you, sir.
That is only for cross-tally purpose.
Thank you, sir. Sir, next question is, sir. Sir, my client is a trust and they have a business unit since beginning, more than 100 years old. The business unit is audited separately under Form 3CD. While preparing computation of income, a trust as a whole, should we consider only net surplus of business unit?
Yes, only in case of the business covered under Section 11, subsection 4 of the Act, only the net surplus is to be included for the purpose of Section 11 and 12, not the whole turnover of that business.
Thank you, sir. Sir, next is, sir, income received in subsequent year, but amount spent from own saving account whether considered as application or not?
So, sir, income received in any previous year can
Subsequent year, sir.
Yes. So, if Form 9A, you are asking the question of reverse of form number 9A. If income is not received, so the income not received in previous year can be applied in the year in which it is received. So this will not be liable for tax also, or in just succeeding previous year by way of form number 9A. Income applied in current year cannot be treated as application of income in subsequent year, because you cannot apply excess of income. You cannot claim loss. Loss is not allowed as per explanation 5 to section 11 subsection 1. You cannot claim any, carry forward any loss.
Thank you, sir. Sir, next is whether clause related to electronic mode payment is mandatory. If all payments are classified as other than electronic mode, whether it will constitute as cash payment. What is the option if assessee has not maintained such detail for payment?
So this clause is compulsory. They want to only collect the data. If you are having any non-electronic mode payments, it will not be treated as a cash. So they only wants to collect the data. You will see in the ITR 7, there is no such bifurcation required regarding the electronic and non-electronic. In ITR 7, they are asking for information only of the 48.3.
Thank you, sir. Next question is already answered, sir. Next. Is it necessary?
No, sir, this is some different question you may ask.
Yes, sir. Sir, fees received for hostel exclusively used by students can be treated as furtherance of charitable activities, and
Yes.
20% cap is also applicable?
Yes. So if any educational institution receives any hostel fees from the students, then it is also solely for education purpose. If the hostel is provided to the students who are studying in that educational institution, and it will not go covered under GPU.
Sir, next question, sir. Sir, is it necessary to fill Form 10A for temples administered by Endowment Department of State Government? Temples normally deposit the contribution in bank deposit for a longer period of more than 1 year. Banks will deduct TDS on accrual basis. How the institution can fund 85% without realization? Whether temples are required to account interest on deposit on accrual basis or realization for purpose of income tax under new provisions?
So I think there are two different queries. First query, they are asking that whether form number 10A for temple administered by Endowment Department of the State Government is compulsory. So as per section 1023BBA, if any of the board or authorities constituted by the central or state government for the administration of any temple or any other religious places, then the income of such board or authority is exempt under section 1023BBA. But there is a provision to section 1023BBA that income of such temple will not be exempted. Such temple is also a separate trust. Only the board or authority is to govern that trust. Therefore, the trust will also have to claim its income under section 1023C Roman 5 or under section 11 and 12. So they will have to follow the procedure of form number 10A. Their income is not exempted.
Thank you, sir. Sir, next question is the disallowance under 14A3 and 14AIA are reduced from application in form 10B and 10BB. But in income tax ITR, it is shown as taxable income, which is correct. The department should issue clarification. Reduction from application is provided in Act.
Yes, utility is doing that if any of the amount is disallowed under section 48 subsection 3, ITR 7 treat it as a taxable income. However, within the limit of 15%, that amount should not be treated as a disallowable amount. In the case of business assessee, if there is any disallowance under section 48 Roman 1A or 48 subsection 3, that amount is set off through any other loss or any other excess expenditure. So that should not be rightly taxable. So department must come out with any clarification, or utility must be modified to consume that 15% at least. If there is any if 15% is also consumed in 40A1 and 40A subsection 3, then for the purpose of 85%, that amount will be taxable.
Thank you, sir. We may include it is in the representation. Sanjay bhai.
Yes.
Next, sir. Anonymous donation exempted from tax as per 115BBC2 for religious purpose trust is not there in Form 10B. How do we reflect it in form?
So if any of the donation is received towards religious purposes, that is also not taxable under section 115 BBC. So that is not required to be reported.
Sir, next is also similar to, sorry. How to show the donation in kind like gold in hundi?
First of all, any donation received in kind is not taxable, and even there are two judgments of Jodhpur ITAT which says that any donation received in kind is not required to be covered under section 11.1 or 11.2 also. So out of this gold received in kind, 85% is also not required to be applied.
Thank you, sir. Whether fee receivable for earlier years not recoverable written off can be claimed as application?
Yes, if it is included in income in earlier year, you can rightly write off that amount and treat it as an application of income.
Sir, next is, sir, how to reflect box offering received by religious trust in 10B BB and ITR 7. Is it an anonymous donation?
No, box offering is never anonymous donation in case of religious trust. It is normal voluntary contribution.
Thank you, sir. Sir, can an educational institution lend money to another educational institution? Can the above fund be considered as application?
If their objects allowed, then they can give it as an amount to other person, and it cannot be treated as an application of income. If it is treated as an application of income, whenever it is received back, it will again become your income. So first of all, if it is your object, then only you can treat it as an application of income. So many of the institutions giving loan to the students for the purpose of their study, they treat it as an application of income. Again, this will be treated as income when it is received back.
Thank you, sir. Sir, is there a difference between business receipt under section 11.4A and business receipt under section 215?
Section 215 refers to the business income where it is relating to the GPU, General Public Utility. Whereas section 11.4A refers to all business which are incidental to the attainment of the object of the trust. So even if any of the trust which is carrying out education, medical services, or even if any trust carrying out any religious activities, if they are having any business incidental to the attainment of object of trust, 11.4A is applicable to all of them.
Thank you, sir. Sir, what if a registered trust out of its income donates some amount to another trust of similar object, not registered under 12AB of the Income Tax Act? Is this will be deemed as application of income?
Yes. If you are giving any donation out of current year's income to any other trust, even if that trust is not registered under 12AB, it will be treated as an application of income. The condition is that the object should be the same. And it should not be out of accumulation of form number 10. Or
yes, sir. Bipin sir would like to add, sir.
Yeah, because now that provision of 85% application, Rajesh bhai will cover that. With donation to another trust,
yes,
now, application will be allowed only 85%. So that's what.
So that thing is from the assessment year 2024-25. If you are giving any donation to any other trust, only 85% will be treated as an application of income. So, however, it is not a disadvantage because whenever any trust is receiving 100 rupees, only they are liable to spend rupees 85. So, if they are giving donation of rupees 100, their income is also treated as application of income 85%. So, there is no loss.
Thank you, sir.
That is applicable from 24-25.
Next question is also answered. It is similar question, sir. Sir, next. The trust is constructing a library project for the general public and given some amount has received to the contractor. Whether this amount paid can be treated as application of income during the year?
If that amount has been paid as per the contract, condition of contract that so and so amount is compulsorily to be given, then the work will be started, or the construction work has been executed. After execution of work, if any advance is given, that will be treated as an application of income. There are two judgments of ITAT Delhi which says that any advance given for purpose of capital asset is treated as an application of income.
Thank you, sir. Sir, next question is, in financial year 21-22, trust received corpus fund and same has been deposited in scheduled bank as FD. But in 22-23, the same has been withdrawn and utilized for normal operation. What will be the tax liability if the contributor nothing mentioned about utilization of fund?
If any of the corpus fund has been received towards object of the trust, then if such amount is not invested in the modes specified under section 11 subsection 5 of the act, then that amount may become taxable, because from the 1st April 2023 there has been amendment in the 11(1)(d). They have made a condition that that amount should be remain invested in 11(5) modes. Otherwise, this will become taxable. However, we have made a representation. Respected Sanjay Agarwal sir has also included in a representation that this 11(1)(d) needs further clarity also, because in which year it will become taxable, this has not been mentioned in any of the section. If in subsequent year this amount is invested or applied in any other purpose. So even if any person has not mentioned that for which purpose he is giving this donation, you cannot apply it for revenue expenditure. It should always form part of corpus of the trust, and it should always remain invested in 11(5) modes only.
Thank you, sir. Sir, next question is whether the income tax paid for shortfall in application in earlier year can be claimed in the year of payment?
Yes. If any of the income tax is paid, that is also treated as an application under the provisions of this section 11 and 12. This is not a disallowable like in business head.
Thank you, sir. Any charitable trust advance given to any school for buying school bags will be treated as application of income?
Yes, if the object of the institution allow, that will be treated as an application of income. Then again, if this is advance, if this is a condition, then only it will be treated. Otherwise, only after supply of the school bag, that can be treated as an application of income.
Sir, next question is,
it is advance. There is no supply of bag.
Thank you, sir. Sir, next question is corpus donation under new tax regime, repaid back. Please explain.
So corpus donation, if it is applied for any of the purpose, even for the purpose of the corpus, it is not treated as an application of income. Say, for example, anyone has given a donation of rupees 1 crore for construction of building, that building is constructed, even though it is not treated as an application of income. But in future, whenever that amount of rupees 1 crore is deposited back into the corpus, then it will be treated as an application of income. This is made because corpus itself is not taxable, therefore construction of building will also not be treated as application of income. But out of corpus, the trust were utilizing that money for other than for the purpose of corpus. Because someone has given donation for building construction, they have utilized this for purchase of the bus. So that will be treated as application only when that amount is deposited back.
Thank you, sir. Sir, next question is, sir, how to fill form 10BD in case of online donation received through gateway or direct in account of the trust, as we do not have a requisite detail of donor?
So if details of donor are not available, then you cannot furnish this detail in the form number 10BD, because any of the person who wants the deduction under section 80G, he will have to certainly send you the information of his PAN or any other ID, Aadhaar. Then only he will be able to reflect this in he will get the form number 10BE. Otherwise, you will not be required to report it in the 10BD.
Thank you, sir. So next question, I think also has already answered. Donation given to non-registered trust institution of classroom will be termed as application of income. Next question, sir. In a section 8 company taking care or steel dogs registered under section 12A and 80G receives contribution through banking channel like online transfer Paytm. all payment received in bank, but company do not have Aadhaar, PAN, name, address detail of the donee. Any donation together, say 25 lakh, will be treated as anonymous and subject to MMR. Is there?
They are compulsorily required to maintain the name and address of the donor. Otherwise, Section 115 BBC will attract even if the small donation are there. Any receiving institution cannot say that it is a donation. Maybe possible anyone has transferred rupees 1 lakh to the trust. If he has not sent a letter, after 2 or 3 months, he may come to the trust. He rupees 1 lakh, kindly refund me. So first of all, obtain that letter. If the trust assume that that amount is never refundable, they can pay tax under 115 BBC and treat it as an income. Otherwise, they will have to show it as a liability for 2-3 years. However, that situation may be funny, but in case of religious trust, they may treat it as an income. And always it is advisable that obtain the name and address from the donor and mention, because in the Paytm also they have message option. In the message, the donor should mention his name and purpose of donation. Then only you can treat it as an income. And then 115 BBC will not be attracted in case of charitable issue.
Thank you, sir. Sir, next question is, sir, Gaushala stray cow home comes in the ambit of charitable or not? Can a Gaushala be granted approval under Section 80G?
Gaushala may be of two situations, I think. One is the providing medical relief to the many of the cows are needing the medical relief. Then that will be the main purpose. Then they certainly can get the 80G. And another situation may be the Gaushala may be for the normal cows and normal other animals. That may be covered in the general public utility. So they will also be covered as a charitable institution. And they can get 80G. But there should be condition that their business activity should not be more than 20%. Because they may be selling the milk and other dairy products.
Thank you, sir. Sir, next question is whether capital expenditure SD also be reported under clause 31?
Yes. Because there is no distinction in application of income for the purpose of Section 11. So capital expenditure is also to be included in clause 31.
Sir, next question is, sir, society formed with the main objective of hunger elimination can give donation to other trusts whose objects are entirely different.
If the objects of the donor institution and donee institution are not the same, then that will attract 115 TD and Section 12AB subsection 4 their registration may be cancelled. If any of the institution is for the purpose of GPU, then they can transfer it to the other institution which is carrying out the GPU. However, income tax law does not specify that one-to-one correlation of active object should be there. If any of the institution is for the purpose of education, to religious, that will be violation. That will attract 115 TD.
Thank you, sir. Sir, next question is in clause 31(1). Application out of current year income is to be reported with mode of payment, and any unpaid portion out of above is deducted in 31(3). Whether unpaid amount can be reported as electronic other mode in 31(1).
So, unpaid amount is to be included in the non-electronic mode, even though it will not be disallowed. Unpaid amount will first of all be mentioned in the non-electronic mode, then it will be disallowed. So that is at the later stage they have asked for, if it is included in the above clause, then it will only be disallowed. If it is not included, unpaid amount is not included in above, then it will not be disallowed at the later stage.
Thank you, sir. Sir, next question is, if I have received rupees 100 and expense also of rupees 100, but rupees 10 is disallowed, since it is corpus donation, I have income of 10 now. Can I fill 9A for this income or 10 and apply next year from my earlier year surplus?
However, if income is of rupees 100, only 85 is required to be applied. You have already applied 90. Even if rupees 10 is disallowed, you have already applied 90 rupees. Even if you need, you can furnish form number 9 if your application is less.
Next, sir. Donation given by religious trust to another not registered religion, whether amount will be disallowed, sir? This has been answered many times.
It will be allowed.
Sir, whether the amount received from the ICI for conducting exam center by an educational institution under section 12A is come under the advancement of public utility to maintain separate books of account?
There is no need of maintaining separate books of accounts because only the activities of GPU, general public utility, they are required to maintain the separate books of accounts for being business carried out by them. If any of the educational institution, first of all, the receiving this amount is not a business income. Because if generally the school are given on rent when it is vacant, even if it is not vacant, but this is in case of educational activity, business, there is no restriction of any business and it is not a business. It is an income derived from property held under trust. So there will not be any violation if for the purpose of main object. So education is the main object. So this is not a violation. And no books of account is required to be maintained separately.
Thank you, sir. Sir, under subclause 2 of clause 23 of form 10BB, amount which was not actually paid is to be reduced from total application. Does this clause have retrospective effect and application claimed for amount not paid in earlier year and shown under creditor is to be reduced here?
No. If that amount of only current year is to be reduced. If your any outstanding creditors are pertaining to the period before 1st April 2022, they can continue as a creditor even after 31st March 2023. There will not be any disallowance of creditors of the period before 1st April 2022.
Thank you, sir. Sir, in case of donation received in cash from various persons is shown in form 10BD under the appropriate clause, is there any possibility of treating it as anonymous donation?
No. You can mention cash donation in 10BD. However, the donor will not get any exemption. But if you are having name and address, then there is no problem. Even in the form number 10BD, more than name and address, they also ask for the identity. Then only 10BD will be accepted. So there will never be any anonymous donation through 10BD.
Sir, next question is, can the income be restricted to application and not putting in active figures?
Can the income be restricted to the application? Yes,
and not putting in active.
Because more than if there is excess application that cannot be carried forward. So there is no need even if you may restrict it to the application.
Thank you, sir. Sir, next query is a 12A registered educational institution. It is a lengthy query, sir. Took a bank loan of rupees 25 crore in year 2003. The loan was utilized for acquiring building and equipments. The fixed assets cost was not treated as application in the relevant years. As in the initial year, the gross receipt of the trust are just rupees 3 crore only, and revenue expenditure was more than gross income. Later, loan become NPA. Now there is OTS between bank and assessee trust. And in 22-23, part of the loan, say rupees 5 crore is repaid. Whether the recent amendment section 11, explanation 4, clause 2, that loan should not be more than 5 years old, or loan should not have been taken before 1st April 21. Whether to treat repayment of rupees 5 crore to be treated application, whether repayment of such loan during 22-23 is to be claimed as application or not.
No, so because this loan is pertaining to period before 1st April 2021. So from the 1st April 2023, there has been amendment. So for this is that amendment is applicable for financial year 2022-23 also. So that will not be treated as an application of income.
Thank you, sir. Sir, next query is, sir, please tell whether depreciation is allowed on, allowed on fixed asset added in past and no application of fund is treated in that year.
So if any asset has not been treated as an application of income, then you can claim the depreciation on that fixed asset.
Thank you, sir. Sir, if Section 8 companies provides the ambulance equipped with doctors, nurses, medicines for companies to carry out CSR activities, whether received from companies constitutes business income and whether taxable?
No, if it is for the purpose, if it may be covered, if they are not directly carrying out the medical activities, then it will be covered in the GPU. But this is not a business income.
But sir, how it will be GPU? Because it is limited to only the companies which are giving CSR donation, not to the public.
Section 8 company is a charitable company.
Only company is charitable, but activity they are doing only to the restricted.
So they are to carry out CSR activities. So if they are carrying out the charitable activity, if Section 8 company is compulsory for charitable purposes, so this will not be business income.
Thank you, sir. Sir, next question is whether society formed to guide members of an industrial area is covered under education or GPU. It
will not be covered under education. It will not be covered under education. It will be only GPU.
Okay, sir. Sir, all the queries related to you have been taken care. I am thankful to you, sir. Now I request our next, first panelist, CA Devan Shahji, with their remaining queries, if any, and CA Bipin Batavia ji with the remaining queries, if any, sir. Just a minute, sir.
Any query?
Sanjay, I can also take any of the queries.
Shall we jointly?
Sir, continue, please, sir.
Okay.
We can do it for another 5 minutes.
Yes, sir.
Then we'll conclude.
One question was asked from Deven Bhai that any interest received on corpus, whether it will be income or whether it will be treated as a corpus. So if the donor has given a corpus donation with the instruction that any interest earned on that corpus will also be treated as a corpus, then it will be treated as a corpus. There is a Supreme Court judgment. But if the donor has not given an intention that the interest on corpus will not be treated as corpus, if there is no intention given by donor, then that interest will be treated as your income derived from property held under trust.
Then what is the money for?
But in such situation, Rajesh bhai,
there is a perpetuity.
What is the use of that donation?
Correct.
Money cannot be spent. Interest is also corpus. And again, corpus is to be invested.
Yes.
So then it's a perpetuity.
Perpetuity, there is no use to trust.
No, then it defeats the purpose.
If there is Supreme Court judgment that they only want to create, their intention is only to want to keep intact that donation, not to spend.
Correct. Interest is also treated as a corpus. But it's an academic, otherwise there is no use to trust. Next, please.
Sir, Bipin sir, question, sir. While filing form 10BD, assessee mistakenly declared donation received 80 lakh as 8 lakh. What is the responsibility of auditor in such situation, sir?
In that, there is a provision for you can file a corrected statement.
10BD.
If there is a figure is taken wrongly or any entry is remained or something is there, so there is no restriction of number of times correction statement can be filed. So it can be revised and accordingly auditor can take it.
Thank you, sir.
So there is no restriction. Any number of times it can be corrected.
Thank you, sir. Sir, next question is, if any trust has sold some capital assets, land, what are the taxability on long-term gain? Can he save the same by spending the same on object of the trust?
Yeah, see, first of all, I would like to clear here, there is no distinction between short-term and long-term in the system of taxability of charitable trust. So it is only capital gain, whether it is short-term or whether it is long-term. That is one clarification. Another is, if there is a capital gain income, 11A, capital A says, if it has been invested in the creation of another capital asset, net consideration, the word is used if net consideration is reinvested in any another creation of any another capital asset, then capital gain tax will be exempted. Now, in this situation, the query is that amount is used for application of income. So there will not be exemption in the capital gain. It will be treated as a normal income, and amount spent will be allowed as the application of income. So it's a normal treatment is to be given.
Thank you, sir. Sir, we will take remaining 2-3 questions. If temple trust have ample agricultural income in addition to temple donation, whether it is property income or other head?
Agriculture income is not treated as an income. Agriculture income.
10.1 is very clear. It is exempted income, exempted to all SSCs, whether it is trust or anybody, individual company, everybody, agriculture income is totally exempted. So 10.1 can be claimed accordingly. So exemption can be availed that. And other than that, then you have to compute the income.
Sir, next question is also general one. Trust made payment to one person exceeding 30,000 for arrangement of tour for students. Whether TDS required to be deducted, if required, and not deducted.
See, 194J, if it is a professional services and it is paid to tour operator, is it to whom it is paid?
To tour operator, sir. For arrangement of tour for students.
So tour operator is not falling under the definition of professional, and not I think technical services, because now there is a addition of technical services from few years. So it will not be as a professional. So 194J. So question of that 30,000 exemption will not apply, and then 194C. As a contract can be attracted, and there also there is a limit at a time more than 30,000 or aggregate in 1 lakh payment is done, then 194C applies.
Thank you very much, sir. With this, all the queries have been resolved. I will request only to Devan Shah, sir, if any relevant queries you think from the old queries, you may deliberate, sir. Otherwise, we will conclude, sir.
Just give me 2 minutes. In the meanwhile, you can just I'll just check out the old papers because I haven't got that.
Not an issue, sir. Otherwise, many of the queries I have read, all has been delegated
we can deliver
as well as in today program, sir. Thank you very much, sir. With this, today we have concluded all the queries. I wish to convey our heartfelt gratitude to our esteemed panelist, CA Devan Shah ji, CA Bipin Batavia ji, and CA Rajesh Mehta ji for their full coverage of all the questions pertaining to close by close in Form 10B. Your participation in such large number is greatly appreciated. We extend a warm thanks to the committee for their swift efforts in producing this valuable technical guide on charitable trusts, especially 10B as well as 10BB. A special thanks and appreciation goes to Chairman C.S. Sanjay Agarwal ji, who served as moderator, contributor, and writer to this technical guide. As we conclude this informative series of 3 seminars, I would like to extend an invitation to CA Piyush S. Chhajjar ji, Vice Chairman of the committee, to share his closing remarks.
Thank you very much, Ashwani ji. Once again, this is the third day, I would say again, as I said, 20th September, 6th October, and 12th October. Thank you very much to the triple role, who is playing a triple role. Amitabh Bachchan ने महान फिल्में की थी, sir. Sanjay Agarwal ji, आप 3 बार कर रहे हो. You are a chairman, you are a moderator, you are a panelist. So एक अमिताभ बच्चन ने triple role किया है, फिर हमारे chairman sir ने किया है. There's nobody else, I believe. So very much thank you to you also, Rajesh ji, Vipin ji, Deven ji. Thank you very much for being with the Direct Tax Committee and addressing the members. For your information, today we had 5,500 plus members. And I believe if you put up all the 3 days to put together, which we had this enlightening sessions on this charitable trust, the most important thing, I think so it has gone beyond. If I add, of course, there may be some mutually exclusive people also, but at least we have addressed more than 15,000 queries, more than 500 plus, I think so we have addressed it. So thank you very much. Again, my closing remarks, my earnest request to all the members. Charitable trust ki jab aap audit karte ho, most of us, we were doing it pro bono. I know. And I am getting a lot of requests from the members that why we are not representing to CBDT, that why such difficult forms were made, 10B, 10BB, and we are not even charging to the clients when you are doing the audit of charitable trust. So I would say to all the members that abhi charge karna chalu kar do, because I know the onus and the responsibility in 10B and 10BB is much higher than the tax audit visitors. And this is the computation of income, which our panelist has said. It is actually a computation of income. And after that, I believe that won't be any assessment requirements. So, and you are providing a professional service. So, एक बार fees charge करो. If you feel I should donate to that institution, आप donation separately दे दो. But please do charge for, so that your services are at least valued once. So, with this, thank you very much for all the participants for joining in the large numbers, raising questions, because your questions make the panel also alive. Chairman sir wants to say something. I will request Sanjay Agarwal sir. Please come in, sir. Thank you.
Sir, let me tell all my viewers, my friends, fellow colleagues, that if this form would not have been so difficult, then why we would have gone out of bound for 3 consecutive seminars, webinars, and addressing gathering of 15,000 and so. Right, and sir. That is why our profession is known for handling the difficult situation in a easy manner. So with the addressing of the most of the queries, I think, Piyush bhai, we have been able to give justification for making this difficult to a simpler one. And I will request all my members once again that we are not going to represent for another extension at all. And please, we are available 24/7 to all of you. Start filling up the form, because I know after replying all those queries, still some more queries will come. So once again, we are trying to see that how the member fill up and make their forms and their audit report functional. And then meanwhile, if any clarification is further used or any schema is being updated, then the board itself may consider it for the extension or so. But from the ICI side, I'm not going to request for another extension. This I'm saying right now. So with this, I think Piyush bhai and Rajesh Mehta ji, Vipin sir, and our Deven bhai, Ashwani ji for coming here, and the entire DTC office, especially from Delhi and Mumbai both. And Piyush bhai holding the fort in Mumbai, even though he is very busy these days, but all of the webinar is there. Otherwise, normally what we do, we address the opening remark or closing remark, rest we leave to the faculty. But I have made sure that all of us remain there and do our duties. So Piyush bhai, thank you very much. And once again, stay safe, stay healthy. Thank you.
Thank you, sir. Thank you,
everyone. Thank you. Thanks.
Thank you.